Bismillahirrahmanirrahim. Assalamu alaikum. I am Syed Akif Shah, lecturer finance at Institute of Business Studies, Kohat University of Science and Technology. The title of this course is Intermediate Accounting and the course code for this subject is BS 363. This is lecture number 20th and the topic for today's discussion is interdepartmental transaction and how to record them in different accounts like trading and profit and loss accounts. This is basically case number 3 pertaining to departmental accounting. The outline of this lecture consists of the discussion related to the types of problems in which we have already covered case number 1A and the case B has already been covered in the previous lectures. So the emphasis of this lecture will be on a numerical illustration to discuss the problem related to interdepartmental transfers. Like for example, if a company has 2 or 3 departments and if they transfer the inventories to each other either at cost or at the sales price, then how to record such kind of transactions. Let us take an illustration number 13.5 as an example to discuss the interdepartmental transfers and how to record them in different financial statements. A business is carried on in 3 departments. So first information we have received from this narration is that the company or a business has 3 departments. Expenses not directly chargeable to any department are apportioned. Let's suppose if there is no just and obvious principle to define for the division of expenses which should be apportioned to Department A, Department B and Department C. If the principle is not clear, then what to do? If the expenses are not directly chargeable to any departments, they are apportioned on the rules. So the illustration or this question has clearly defined that such kind of expenses should be divided 1/2 to Department A. By 1/2 we can see that we can divide 1/2, we get 50% of that expense should be charged to Department A, 3/10 to Department B. So divide 3 by 10 and we got 30% of those amounts should be charged to Department B and 1/5 to Department C. So we can divide 1 divided by 5 and it will give us 20%. So we have made a formula in this question that whatever expense where there is no just principle for the division, such kind of expenses may be apportioned and divided to Department A, B and C on the basis of 50% to Department A, 30% to Department B and 20% to the Department C. Let's move ahead. From the following particulars, the instruction asks us to prepare the trading and profit and loss account of 3 departments in columnar form. There are 2 types, independent and columnar. So the question asks us to make the trading and profit and loss account of 3 departments in columnar form, one at a time at one page, showing the gross and net profits, which also shows what is the gross profit for each department and the total gross profit for the business. And similarly that trading and profit loss account should show the net profit for all 3 departments and then as a whole in aggregate net profit to the business as well. And the second portion asks us the percentages thereof and of the totals to the turnover exclusive of the interdepartmental transactions. So we have to show the percentages as well with respect to total turnover and the net profit as well. The percentages related to gross profit and the net profit with respect to the turnover. Here turnover means the total sales volume. So for Department A, if we are going to take the turnover value, then this 111,740 rupees of sales will be considered as turnover of Department A. So this is second portion which will be covered at the end of this lecture. The first portion asks us to make the trading and profit and loss account, and the data pertaining to the three departments, Department A, B, and C, are as beneath. The first statement says stock on hand at 1st January for Department A, it is 17,820. For Department B, it is 5,600. For Department C, it is 1,250. Similarly, stock on hand for December 31st, which is known as the ending inventory or ending stock for Department A, is 19,360. For Department B, it is 4,710. For Department C, it is 3,160. Third statement is the data related to the outside sales for the company. For Department A, the sales volume is 111,740, which is also named as turnover in this question. For Department B, it is 56,130, and for Department C, the sales volume for the year is 48,510. Direct wages are the wages paid by the business to the worker in the manufacturing of the product, which are actually the part of cost of goods sold, are known as direct wages. For Department A is 27,400. For Department B, these are 13,280, and for Department C, it's 9,150. Outside purchases is the data related with the purchases of Department A, B, and C. Regarding the outside purchases means this data is does not consist of any product or inventory purchased from the other department. Like, for example, if Department A has purchased certain number of commodities or inventory from Department B, so such kind of data is not included in this data of 40,410. Rather, these consist of the only purchases which are outside the business from other suppliers or vendors. For Department B has purchased 15,370 and Department C has purchased 12,560. The salaries paid to the employees of different departments are, for Department A it is 9,450, and for Department B it's 5,720, and for Department C this is 4,160. The other data, which consists of the interdepartmental sales, since this problem is related with the inventory sold to the departments to each other as well. Like within the business, one department is selling and the other department is purchasing the commodity or inventory or product, and vice versa. So we have the data regarding that Department A has sold to B rupees 9,040 of the inventory or product. The Department A has also sold certain number of commodities or inventory to Department C worth rupees 4,820 as highlighted in pink. Department B has also sold the commodity to the Department A worth rupees 11,260, and at the same time it has also sold the inventory to Department C worth rupees 2,190, and finally the Department C has also sold the commodity to the Department A in return of rupees worth 3,480. So in nutshell, Department A has sold to the two departments. Similarly, the Department B has also sold inventory to the two other departments, which are A and C, whereas the Department C has sold inventory only to a single department named as Department A of worth 3,480. So these are interdepartmental sales to each other, because there might be possible that one department's finished product is considered as a raw material for the another department. Similarly, the other's department finished good could be a raw material for the third department C, and vice versa as well. This is the reason that one department may purchase the inventory or product from the other departments as well. The management salary is worth rupees 12,000. These are general salaries, and as mentioned at the start of this question, that whenever there is no proper just principal, then we have to divide those expenses with respect to 50%, 30%, and 20% as mentioned in the ratios. The more data pertaining to this question which will assist us to complete our profit and loss statement is rent and taxes paid out 14,600. Insurance expense paid by the business is rupees 2,100. Similarly, horses, vans, etc. etc. purchased and expenses related to the horses and vans are rupees 8,700. Postage and telegram expenses consist of rupees 1,100. So these kind of expenses are not divided with respect to any proportion or the just principle given in this question. So therefore we have to follow the starting percentages or ratios which were mentioned in the question, that we have to divide 1/2 to Department A, 3/10 to Department B, and 1/5 to Department C. So this principle will apply on rest of the expenses where there is no such clear division or just principle has been mentioned. Bad debts, these are already clear that Department A's bad debts are 2,760, Department B's bad debts are 1,430, and Department C's bad debts are 2,240. Now what are bad debts? Bad debts are actually your credit sales which turned out to be uncollectible. So therefore our account receivable which were supposed to be collected from our credit customers has been defaulted by them. So the company has decided to write off such kind of expenses or account receivable with the name of bad debts, because these are the debts which the company is not going to receive in the near future from those customers. This is why such kind of loans or account receivable turned out into the name as bad debts. Sundry expenses are rupees 5,300. Once again the same rule will be applied on the division of sundry expenses to Department A, B and C. The same principle will also be applicable on the depreciation written off as 7,400, and then finally stationery and printing expenses of rupees 2,600, and then the final, last but not the least, advertising expense worth rupees 4,500 will require to be divided amongst Department A, B and C respectively. Let's make the trading account first, and then let's make the profit and loss statement. So this is basically a trading and profit and loss account for the year ended December 31st. As the year was not mentioned, therefore we have omitted to mention the year. The left hand side actually told you about the purchases and interdepartmental transfer, and whereas the right hand side with the same number of columns shows you the revenue, sales and interdepartmental sales as well. So let's write down the related data, as we have three departments, Department A, B and C, and then the final column shows us the total value of all the business by summing them up. So let's start with the opening stock or the inventory on hand at January 1st. It was 17,000 for Department A, 5,000 for Department B, and then 1,250 for Department C. And in sum up, if we sum up all the stock pertaining to the each department, then we will have the complete full-fledged stock on hand 24,640. And this data has been taken from our initial data given in the question. We are picking up this data from the illustrations data question. Similarly, let's move ahead at the solution. The purchases data for Department A and B and C. So we can go back. These were the outside purchases of 40,000, 15,000 and 12,000. We can just simply pick up this data and plug it into the trading and profit and loss account. Here we done the same, 40, 15 and 12, and then we have sum up all these three department purchases. It come up with 68,340. Then we have departmental transfer as well. This data was telling us that the Department B has purchased. Let's discuss Department A first to write down its purchases from the other department. So we can see that the Department A has purchased from Department B worth rupees 11,260, And similarly, it has also purchased certain inventory or product from department C worth rupees 3,480. If we sum up both these purchases of department A, it will come up to 14,740. These are departmental transfer, and this inventory has been purchased by department A from department B and C. Similarly, department B has purchased certain amount from the other departments, which are department A and C. So B has purchased certain number of inventory from two other departments that come up with 9,040, and same is done by C. C has also purchased inventory from department A and B, and it worth 7,010 rupees. Now we have to sum up horizontally 14,000, 9,000, 7,000, and it will come up to 30,790. Then we have direct wages, which data has already been given in the question. Let's have a look. Here it is, the data 27,000, 13,000 and 9,000. We can simply pick up this data and plug it the right place. So we have mentioned 27,000, 13,000 and 9,000 to the respective departments for their direct wages expense, and then sum up all these value and we got 49,830 in our total column. Now we have completed the left hand side, and let's forget about this gross profit values because these will be calculated on the basis of revenue minus these direct expenses and to remove the inventory as well. So right hand sides tell us about the sales data. Sales for department A, B and C has been picked up from the question. It is 111,740 for department A, 56,130 for department B and 48,510 for department C, and the total sale volume of this business is 216,380 rupees. Similarly, we have to mention the sales of each department, which is termed as departmental transfers to each other. Now let's go back to the question and find out how did we calculate 13,860 for department A. As we can see that the department A has sold an inventory worth 9,040 to department B, and it has also sold certain inventory worth rupees 4,820 to department C. So if we add up both these values, our sales of department A to the other two department B and C respectively, we will come up with 13,860. And same is done for department B, and the same has been mentioned for department C. Let's check it out, the department C sale. So we have seen that department C has sold to department A only rupees 3,480 worth of inventory. Therefore, we have directly mentioned this amount in the interdepartmental sales data. If we sum up all these three values for the departmental transfers, we come up with 30,790 rupees of total departmental transfers. Finally, we have already been given this stock at December 31st in the question. Let's check it out. Here it is, the stock on hand at December 31st. So we can pick up this data and mention in the trading account section of this question as it is. By doing all this, we have to, in order to calculate the gross profit for each department, we have to sum up the values of department A, B and C. Like we have to sum up these value and it will come up with 144,960 rupees. And now let's compare it with the total sum up value of department A for the 4 different titles, and then subtract this value from 144,960. If this side is greater, we have to mention it on the left hand side by the same value, and then to minus the accumulated value of all these 4 values, and we come up with 44,590. Same mechanism is done for department B. We have to sum up all these values for Department C as well. Then we have to compare this 55,150 with the 4 values of trading account at the left hand side, and then to minus this from the right hand side's value, we will come up with 25,180. So this is the way how we can calculate the gross profit for each department, and CD means to carry down this value to the next stage for calculating profit and loss account, and BD means we have brought down the above value. So the next step is to carry down the gross profit over here, and then to mention the same gross profit what we have calculated from trading account of the business. Now it's time to allocate the expenses properly to the each department, since we are come up with the gross profit pertaining to Department A, Department B and Department C, and then we have also the full-fledged or full complete gross profit of the business. The next step is to calculate to allocate the expenses properly to its different accounts. So the first is to mention the salaries expense. Let's go back and check it out. Here it is, the salaries expense, which are clearly bifurcated for each department, are differentiated, mentioned clearly for Department A, B and C. So we have to pick up this data and mention in the profit and loss account. We have done the same. 9,400 for Department A, 5,720 for Department B and 4,160 for Department C, and then we have to accumulate all these 3 values. So this was already been given in the question. The next step is really important to understand for the management salary. We can see that how to divide management salary. The ratio was clearly mentioned that 1/2 should be charged to Department A, 3/10 to the Department B and 1/5 to the Department C. The total management salaries in the questions are 12,000. So we have to multiply 12,000 by 1/2 and we come up with 1/2 portion of Department A's management salary. For Department B it was 3/10, so 12,000 multiplied by 3/10 and we come up with 3,600 for Department B, and for Department C once again 12,000 multiplied by 1/5 is equal to 2,400. If we sum up all these 3 values, we come up with 12,000 of management salaries. So this is the mechanism and way how we are going to divide each expense in the question. Same as been done for rent and rates. The total value was given in the question, it was 14,600. It was 14,600. The same formula was used to divide this rent and rates amongst Department A, B and C. What we have to do, we have to change only this 12,000 by 14,600 in order to calculate the rent and rates for Department A, Department B and then for Department C, and we will come up with the same values as mentioned in the question, which is 7,300 for Department A, 4,380 for Department B and 2,920 for Department C. So this is the way how we have calculated the expenses related to stationery and printing, expenses related to the advertising, then sundry expense, postage and telegram expenses, and the insurance expenses. Up to this point we have calculated and used this same formula pertaining to 5:3:2, or we can say that 1/2, 3/10 and 1/5 division. However, for the bad debts, since the question has given us a clear-cut division for the bad debts in the question, let's go back and check it out. We are given bad debts for Department A, for Department B and for Department C clearly in the question, so therefore we are not supposed to apply the ratios for the division of bad debts. Therefore we have done the same, rather we have picked the same values and plug it up to allocate the bad debt expenses to the each department. And then finally the depreciation expense once again will have to be divided on this formula what we have mentioned in this presentation. So now we come up with the last step to calculate the net profit for each department. So what we have to do, just bring down this value to the final column as mentioned in the question, and then to sum up all these expenses for first department. Sum up all these expenses, and you have to minus the expenses from the gross profit of each department. Gross profit minus all expenses will give you the gross net profit for each department. If we subtract all this accumulated sum of value from 44,590, we get the net profit for department A as 3,230. We have done the same for department B, 31,000 minus all the expenses of the department B, and we come up with 6,360 net profit. And we have done same for the department C. At the end we are going to add up all these three, and it will give us 16,710 as net profit of the business. So this is the way how we can calculate the interdepartmental transfers in trading account, and then to incorporate the profit and loss account in this same statement or same financial statement in the columnar fashion. So the point of emphasis over here was the departmental transfers and how to mention such transfers in the trading and profit and loss account. Beside that, we have also discussed how to allocate the expenses pertaining to the specific department. Now let's discuss the second portion of this question, which is quite simpler. It asks us to find out the statement of percentages for gross and net profit on the basis of turnover. As we have previously explained that turnover is the total sales volume. So how did we calculate it for department A? Gross profit on turnover. It was calculated by dividing the gross profit of department A, which was 44,590, by the department's sales volume, which was 111,740, and then to multiply it with 100, and it will give us 39.9%. This is the way we have calculated the gross profit percentage for department B and for department C as well. And then finally we have also calculated the gross profit on turnover for the total column as well. How did we calculate the net profit on turnover? The formula was to divide the net profit of department A, as mentioned in this statement as well. 3,230 was the net profit for department A. It was divided by the sales volume of the department A. Let's counter check it out. This is the sale volume of department A. So we can see that department A sale was 1,11,740. We have done the same, and by dividing this net profit by the sales volume of department A, we come up with 2.89% for department A. So we can infer that the net profit margin of department A is 2.89%. For department B, the net profit margin is 11.3%, and for department C, net profit margin is 14.68%. However, the total net profit margin of the business is 7.72%. So such kind of percentages assist the manager or the financial managers to find out where the problem lies and to emphasize on that department. So the basic problem is in the department A because its net profit margin is quite lower than the other two departments. So this was all about the discussion of interdepartmental transfer or sales volume with respect to the departmental accounts. Thank you very much for listening to this lecture. If you have any confusion, you can ask your question on KCMS, or another way around, you can also email me on my registered email as mentioned in the footer of this lecture. Good luck for the day. Allah Hafiz.